January was a weaker month after 2 very strong years for the markets around the world. World markets were down around 5%, with the S&P down around the same amount. The Nasdaq, or the sort of tech index, down 9%. Australia fell 6.5%, so somewhat weak performance from Australia, although IML Funds outperformed. It was pleasing to see the main fund down only 4.3%, so to over 2% outperformance. We were held back a bit by the iron ore price being very strong. We don't see that as sustainable longer term. The oil price was also very strong, and we don't profess to be commodity forecasters. Also hurting the funds a bit was CSL, where people are concerned about plasma collections, but that is likely to be a very short-term issue. Benefiting the funds were traditional industrial companies such as Orica, Horizon, Amcor and Origin, which all were positive for the month in weak markets. These are somewhat crazy times. There's a lot of debate about when central bankers should raise interest rates by 0.25% from essentially zero when inflation is raging as high as about 6% in many developed countries. So that debate seems crazy. We should really have much higher interest rates already, one would have thought, although there's so much debt around. There seems to be an absence of common sense around the world. Common sense is extremely uncommon. Not only do you see some people driving on their own in a car with a mask on, people are paying more for an image of something than the thing itself. Adidas recently launched a collection of non-fungible tokens and sold them for $23 million, which seems extraordinary for a picture or a few pictures of sneakers. In such an environment, we continue to focus on companies that we believe will deliver in the long term to our investors, that have durable, sustainable cash flows and dividends, appropriate valuations, and that can grow.